What's going on, penny boys and gals? It's your boy, What the Duck here, and it is time for another trading class video. This is a bonus class. This is a charting bonus class. If you are already a PBU or Penny Boys University alumni, well then you already have a pretty good grasp on charting because you took our 1-month charting program that goes along with all of our other trading classes. If not, well, you hopefully have already joined us for our super trend video and our standard deviation video, as well as a TSI video, which are all indicators that we go over in our bonus classes. If not, don't worry, we will be doing them again. But this one we'll be going over today is the ADX and, of course, the DMI, which, if you don't know what those are, they do go hand in hand, and you will find out in a little bit as the video continues. These are actually both indicators that are invented by Wallace Wilder. We are also going to be going over a bunch of other indicators in our bonus classes going forward that were invented by Wallace Wilder, and finishing off by using them all together to find support and resistance over sold conditions as well as volatility, because that's kind of what this is all about, is not just using one indicator, but realizing how to use a bunch of different indicators successfully together. So let's go ahead and get right into the video. What is the ADX? Well, the ADX stands for the Average Directional Index. It is used to determine strength of a trend. Let's go ahead and bring up Webull. So first of all, how do you find the ADX indicators? Well, you go to Edit Indicators, and it's pretty much in alphabetical order. You have it right here, ADX. So you have your subcharts, which are the ones below here, then your main charts, which are up here. So we're going to go over this one first, the ADX. So this color varies depending on your settings. You can always change it by going to style if you want to change blue or purple, whatever it may be. I'm just going to leave it the way it is. So the ADX is this yellow line on this subchart, which is the chart below the actual candles main chart. So the ADX, like I said, is the average directional index, and it is used to determine the strength of a trend. So in theory, if the ADX is above 20, well, the trend is considered strong. And when it is below 20, the trend is considered weak, or that there is no trend at all. And if there is no trend, this might mean the stock is consolidating. Right now, we're looking at Twitter. It looks like the ADX is 35, so it's showing trend strength. And down here, you can see that at this point, the ADX was 92. That was showing that this is a pretty big trend. In this case, it was a downtrend. Right now, it looks like it's showing an uptrend, and it's starting to show some strength. It's getting into the 30s. Some traders enter trades slowly while the stock is consolidating. So if the ADX is below 20, it means that the trend is either weak or consolidating. So some traders would look at this and they would enter the trade slowly if the stock is showing consolidation. And also if they have a fundamental or technical reason to believe that the stock is due for a rise in price. This could be because they have faith in the company. It could be because they think it's trading lower than it should be valued. Maybe there's a gap to fill, which means that the price was trading at a certain price, dropped down for whatever reason, and is currently consolidating before it begins to rise back to the price it was trading at before it fell. However, just because a stock is in a non-trending zone on the ADX does not always mean that the price is consolidating. Basically, just because the ADX is under 20, it does not always mean that it's consolidating. That's a possibility, but another possibility is that the stock is currently in the process of making a trend change or a reversal, which would make the current trend weak. This is currently being reversed. So it can either the ADX is showing, like in this case, 7. This could mean either A, it's consolidating, or B, this trend is weak because it's currently reversing. So a downtrend is getting to be a weak downtrend because it's going to be turning into an uptrend. So it can mean one of two things. So some traders enter or exit trades when they see reversals. If the trend is reversing from up to down, they might sell the stock if they are already in it. And if a trend is reversing from down to up, it might be a good time to enter the trade because it's starting to reverse and it's starting to go back up again. A lot of traders wait until confirmation before entering after a reversal. This means that they see the reversal forming and they wait to see if the reversal holds up before entering. A low ADX could also mean that the stock is currently too volatile for the trend to be strong or even there at all, because volatile stocks tend to bounce between uptrending and downtrending, which is why the ADX will be low, because the trend isn't strong since it keeps changing so often. So if it keeps going up and down, up and down, up and down, the trend might be weak because strong uptrend or a strong downtrend, like in this case, is a longer downtrend. Whereas if it keeps bouncing up and down, it might be not as strong as a big trend. So volatility can also be a reason why you have a low ADX. So how do you determine the difference between a low ADX, meaning that the stock is consolidating, reversing, or volatile? Well, other indicators. You don't go to battle with just a shield and no armor or sword. Indicators are the same way. It's good to combine indicators. Using just the ADX is like having just a shield and no sword or armor. The ADX tells you the strength of a trend. So the ADX is low, that means that the trend is weak. Now you can use a reversal indicator to see if the trend is weak due to the stock reversing. One like the MACD, the Moving Average Convergence Divergence. When the MACD line is above the signal line, it can show you an uptrend, and when the signal line is above the MACD line, it can show a downtrend. And when the lines cross, it can show a reversal. Really quickly, we're just going to bring up that MACD, which is also a sub-chart, the MACD. So once again, you have your blue signal line, your orange MACD line, but we go over all this in Penny Boys University, so I will not be going into it in too much detail now, because if you are in Penny Boys University, then you know how this works. I'm actually going to go ahead and get rid of the MACD, because right now we are focusing on the ADX. And if you want to learn about the MACD, then definitely join us in Penny Boys University. We actually have a full class going over the MACD, VWAP, RSI, Bollinger Bands, Fibonacci, and the whole 9 yards in our charting month in Penny Boys University. So with the MACD, when the lines cross, can show a reversal. So if you are seeing a reversal on the MACD and the ADX is low, well, you might be able to assume that the ADX is low due to a possible reversal and not due to consolidation or volatility. You can also use a supertrend indicator to help with this, as well as a TSI or parabolic SAR indicator, which are all part of our bonus classes. So if the MACD is not showing a reversal, well, you can rule out the reversal being the reason the ADX is low. Next up is trying to figure out the ADX is low due to high volatility. One indicator you can use for that is the ATR or the STDV, which are also going to be indicators that we either have gone over in our prior bonus classes or will be going over in the future. You can use these two indicators to measure the volatility of a stock. So if the STDV or ATR is showing high signs of volatility, well, you might be able to assume that the ADX is low due to volatility. And like I said, we'll be going over those later on. So once again, the ADX is low and the ATR, or another volatility indicator, is not showing signs of volatility. And it's also not showing signs of reversal in the MACD, or any other reversal indicator. Well, then you can assume that the ADX is low because the stock is consolidating. So now you can trade accordingly, knowing the stock is most likely in its consolidation period because it's not showing the volatility, and it's also not showing reversal. And that kind of narrows it down because the ADX is low because either volatility, reversal, or consolidation. Well, in this case, it would be consolidation. Kind of narrowed down to that. And trade accordingly. So knowing the stock is most likely in its consolidation period. So like we went over before, if you have faith in the stock, this might be a good time to enter, because sometimes periods of consolidation lead to price spikes due to news or trader technical analysis and sentiment, meaning a bunch of traders are starting to see the same thing in the charts and volume might start to pick up. So if a stock is consolidating and you're confident in the stock, that spike will hopefully be up as opposed to down. So the next thing we're going to be going over, we just went over the ADX, is the DMI, which is actually very similar to the ADX in the sense that it actually uses, in a second, it uses the ADX. I'm going to keep the ADX on there just so you can see. So here you have the ADX. Well, as you can see, this orange line is also the ADX, which is inside the DMI indicator. So right now the ADX is 63.29. Well, here it's still 63.29. The DMI actually has the ADX inside it, in this indicator. Same exact as the actual ADX. ADX now. So here you go. You have the ADX, but you also have the DI. What does it all mean? Well, the DMI stands for the Directional Movement Index. And there are three lines. The ADX, which we just went over, the DI plus, and the DI minus. The DI plus If that's over the DI minus, the price is moving up, typically. The D minus is over the D plus, the price is typically moving down. Now, crossing the lines could show reversal. So once again, the plus, like right here, you can see the price is going up right now. So the price is going up. Typically the price is going up. Typically the plus is over the minus. So right now, plus is green, the minus is purple, low, green. Price is showing upward movement. Price is showing downward movement. Minus, the purple line is above the green line. They cross, showing a possible reversal. Green line is above the purple lines. So the crossings are showing reversals, and you want the plus above the minus for an uptrend and the minus above the plus for a downtrend. Right here, that goes. So if the plus one, the plus DI line, so in this case the green line, so the DI plus line crosses above the DI minus line, and the ADX is above 20, or ideally above 25, the potential buy signal. Let's go ahead and see if we can find that. So we're looking for the plus to be above the minus and the ADX to be above 20. So right now the plus is below the minus. That's not typically a good buy sign. Right now the plus is above the minus. However, the ADX is only 15. It's 10 right now, 14. And here we go. The ADX is now 24. So it just crossed above 20. As you can see, the plus is above the minus. This could be a potential buy sign. And as you can see, stock actually went up. So it went up from 65 to 70 using this parameter. So I'm just going to say it one more time for those of you who missed it. If the D plus line crosses above the D minus line, the ADX is above 20, or ideally above 25, the potential signal to buy. If the D minus crosses above the D plus, and the ADX is above 20 or 25, well, this is an opportunity to potentially short a trade or sell if you're in it. The same deal. You have the minus above, crosses above the plus. ADX is now 29, showing maybe I should sell or short. And if you did, you would short it from $75 down to 61. So that's, that'd be a good trade if you were shorting a stock or if you were betting against the stock. So really quickly, the DMI shows which direction a stock is moving. It has a minus line and a plus line. The minus one shows the selling pressure. The plus one shows the buying pressure. The ADX line shows the difference between the two. If the plus line is above the minus line, there is a possible upward movement. If the minus line is above the plus line, it can show downward movement. If the lines cross, this could mean a trend reversal. And the more spread out the two lines are, the stronger the price trend. So that is one way of using the DMI. Of course, you want to use other indicators as well alongside it. We go over a whole bunch of them in Penny Boys University, which are super, super helpful. But this was the DMI and the ADX. So you can use the ADX alone if you are confused by the D and the plus D and the I plus, the D plus and the D minus. Or if you want to use a different indicator to show that, because the MACD also can show that. There's other indicators you can use. So if you only want to use the ADX, that's perfectly fine too. You can use the ADX alongside the MACD. You go over in Penny Boys University, or you can use a DMI without having to use these two together. So that is our DMI and ADX bonus class video. If you are a little confused by all that, maybe you had trouble keeping up, that's okay. If you join our Discord, you can go to the free trading classes. We have a bunch of free trading classes, which also, if you click them, it goes to the handout. The handout right now, we have the ADX handout, the DMI handout. So as you can see, ADX, it goes over all the stuff we just went over. And the DMI goes over all the stuff we just went over as well, like all the different lines and what the plus line crossing but the minus line means. So if you want to use these notes to reference back on, because I know this video might have been a little bit quick for you, or might have been a little confusing, because it is, these are confusing indicators. They are more advanced indicators. Well, definitely check out our Discord. It's a free Discord, and those classes are in our free trading class area, so you do not have to be a premium member in order to view those classes. That way you can maybe rewatch the video, because the videos will be in there as well, and follow along with the handout. Or you can even copy and paste some, so you can know, all right, when this happens, this is what that means, as opposed to trying to memorize everything. That's why we do the handout, so you have it in front of you for retention purposes. So definitely check that out. That's on our trading Discord, the free trading Discord under free trading classes, which are available to everyone. You get the handout and the video. And if you want to learn more about indicators, definitely check out Penny Boys University. It's a 22-class trading program. And we go over charting for a whole month. And that is the end of our DMI and ADX indicator video. These are both indicators that were invented by Wallace Wilder. And next up, we have a bunch more indicators invented by Wallace Wilder. We will eventually go over how to use them all together. But until then, I hope that you all make some bread.